helping you to weather good and bad economies without putting retirement on hold. This is the Tumolo Financial Podcast with Ken and Nick Tumolo. Ken and his son Nick know that creating a comprehensive financial plan can align your hard-earned life savings with your retirement goals. Consider them your retirement architects. Now, the Tumolo Financial Podcast with Ken and Nick Tumolo.
And I want to go over RMDs because there's this little tidbit that I didn't realize about them. First, as we all know, RMDs, they are required minimum distributions, and they must be taken from your retirement accounts once you turn 73. Of course, that's so Uncle Sam gets his share of taxes. But apparently, Ken, your begin date has a little bit of leeway. Take a listen to Morningstar's Christine Benz break this down.
So there's what's called a required beginning date. And this is actually April 1st of the year after the year in which you turn 73. So an example, say I turned 73 in 2024. I would have until April 1st of 2025 to take that first RMD. The tricky part about it is that April 1st RMD would be for 2024, I'd have to take another one by year-end 2025 to account for my 2025 RMDs.
So, Ken, where do you land on this? Because that strategy seems like you're basically getting a double tax bill that first year. How do you plan for this with clients?
Yeah, and that could actually be bad. I hate to say it depends, but it really depends on a person's situation. So think about it. If someone's already in a kind of a high tax bracket and they have to take their RMD and they delay it so they can do a double for the very first time they draw, taking a double might equal even more in taxes. And what I mean by even more in taxes, it might push some of that money into a higher tax bracket. So you're paying a higher percentage on the money that you're drawing. So to me, that's a bad thing.
Yeah.
So a lot of times what we're doing is planning ahead. And I've had people come in when they're 72, 73, and they're right at RMD time. And yes, we can still affect the tax piece of it over time, but the earlier we start, the better. And I was working on a case, and I met with this couple. This was last Friday, and they came in, and we had built out our Tumolo Financial Retirement Checkup, and 62 and wanting to retire early. And what we do is we always project out ahead in those retirement checkups, because we want to look, is there a problem down the road that we have to get ahead of? In the world of taxes, when you're doing planning, if you start earlier, you can do more. And reason why is someone at 62, by the time they're 75, 73 or 75, depending on their year of birth, basically at 73, 75, they have to take those required minimum distributions. And so if they're 62, and let's just say 73 is their year, now we're looking, we got 11 years in between. And so in between, before they reach that point where they're required to take money out. And this is the problem. When you're required to take it out, you kind of lose some of the control, because you have to take that money out no matter what and pay the taxes on it. And the IRS doesn't care if the stock market's down. They don't care what tax bracket you're in. You have to take that money out. Otherwise, you'll get a penalty. So this couple, when we looked down the road at age 73, they actually had a big problem. Their required minimum distribution would have been close to $70,000 per year. And so they already had pensions and Social Security that was going to come in. But when you do that, their taxes basically, they went from about 6% in taxes to about 18% in taxes, average tax rate. So those taxes really jumped up on them. And the taxes went, even though they had to take out that amount of money, about $31,000 of it went towards taxes, which was just crazy because of the way our tax code works. Because all of a sudden their social was taxed more, and then the money coming out of accounts was taxed. So you got to be careful of these things. So when you start earlier and you're looking ahead for someone, with this couple, what we'll do until they reach that point, we'll do things such as Roth conversions, or draw some of the money out of those IRAs to knock those down over time as part of their income. And this way, by the time they reach RMD age, their RMD won't be as much. So they won't have to take out as much money at that point. So this way, they're gaining control of their taxes. instead of just basically losing control of their taxes. And that's what time does for you when you start to do planning. Looking ahead, getting ahead of these things, putting yourself in more control. And we do it every year with clients. So people that work with us, we do 6-month reviews. So pretty much every September, October, November, those where Roth conversions will help them with their future RMD issue, or even some of the gifting things that they'll do later on with kids and loved ones. We want to get ahead of those things. So that's why when we're getting together, we're always running those strategies. And that Tumolo Financial Retirement Checkup is such a great tool. It's a great tool for us, for our clients, for listeners, because it puts the numbers there. And that way the numbers are in front of the person. And if you show a strategy, if you do this, then you could show them the effect of doing that versus not doing it. And it makes it easier for a person to make a decision. So numbers are, I love numbers. But the thing is if you can put 2 numbers in front of someone, and if I said to you, if you do this, you'll have $10 more, and if you don't do it, you'll have $10 less, then the decision becomes easier, right? Because you've got 2 numbers to look at. And so that's really what we're going for when we're building out that retirement checkup. One thing I want to point out, Allie, we do that retirement checkup for listeners complimentary. One other thing I want to add is we do have the Middletown and East Lyme office, and sometimes callers will call up and they'll say, oh, I don't know if I could get to Middletown. I don't know if I could get to East Lyme. I just want to put people at ease. The very first time we talk to them, we talk to them on the phone at first, so they don't have to worry about coming down to the office and driving. The first time, it's really more of a get-to-know-you conversation on the phone. So first 5 callers, we offer that out to our number, 860-854-3434.
Investment advice offered through Tumolo Wealth Management, a Connecticut-registered investment advisor. Content contained herein should not be construed as an offer or solicitation for investment advice or for the purchase or sale of any security, insurance, or other investment product. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here.